CoreWeave's stock price has more than doubled since its March IPO, trouncing the broader Nasdaq's return of 23.9% and minting at least 5 billionaires in the process. CEO Michael Intrator, who's 56, is now worth $6.7 billion as of September 1st, landing him on the Forbes 400 list of the richest Americans for the first time. Co-founders Brannon McBee and Peter Solanke, as well as early investor and board member Jack Kogan, are also new billionaires thanks to CoreWeave. NVIDIA has been a significant partner for CoreWeave, and CoreWeave CEO describes the relationship as highly symbiotic, though not equal. CoreWeave buys NVIDIA's chips. NVIDIA is also a customer of CoreWeave and has agreed to buy CoreWeave's unused capacity through 2032 in an agreement that's currently worth about $6 billion, but subject to change. NVIDIA also invested some $350 million into CoreWeave, and that investment is now worth around $2.5 billion. CoreWeave's cloud infrastructure is designed to optimize the delivery of NVIDIA's technical solutions to their target market. By focusing their engineering resources on this specific use case, CoreWeave has developed world-class expertise in building and delivering the necessary infrastructure. That's also been dependent on their ability to finance it all, since GPUs and giant data center builds are extremely expensive.
I always say that one of the things that we did so well is we really understood what Silicon Valley and the West Coast capital is built to do, which is this incredible, we're going to change the world, we're going to make investments that are, they may succeed, they may fail, but they're incredible capacity to go on the adventure of trying to build new things that really bend the curve of technology and bend the curve of humanity. At the same time, what we had that was unique was an understanding of what it's like to come back to the East Coast, to walk into the offices of private lenders like Blackstone and Magnetar, guys who are in the debt markets that have an incredibly different lens on how they face the world.
CoreWeave has successfully wooed the debt markets and raised some $29 billion in debt financing, but with so much debt also comes interest, and the company spent more than $250 million paying interest on that debt last quarter on just $19 million in operating income. However, as CoreWeave pays down that debt and refinances it starting next year, that interest expense should go down. Plus, about half of CoreWeave's assets are GPUs, which are said to depreciate over 6 years, or less now that NVIDIA is upgrading its chips faster. Still, CoreWeave says interest and infrastructure costs are built into its multi-year contracts. I think the average length is about 4 years, meaning that there should be some profit left over at the end of each contract. In less than a decade, the Livingston, New Jersey-based business has spun up a data center empire. They booked $2.2 billion in revenue in the first half of 2025, on net losses of about $600 million. By 2031, it hopes to bring in another $30 billion in revenue, mostly from contracts with Microsoft and OpenAI, and a string of AI startups such as Cohere and Mistral. CoreWeave started when Intrator